JB here. Tuesday, September 2nd, 3:15 on this fine afternoon talk. Really quick about the market. Some names I'm looking at go from there. S&P down almost a percent here off the lows. Rough start to September, right? I mean, we had some follow through. Well, not follow through, but we had the pull on Friday after the PCE data, which was mostly in line. Just seemed like a sell the news event. And then today, just continuation. And it seems like the catalyst is whatever headline or um, data point that they want to throw out there, right? It's either the government shutdown, pending government shutdown in a couple of weeks. It's the tariffs. It's the fact that tariffs might get the ruling might get reversed. It's the geopolitical situation. So you had the big powwow with India, China, Korea, Russia, right? That the U.S. is pushing those folks away. It's like any kind of rationale around the market selling off. That's what it is today. And to me, and then some of it, of course, is similar to what we had a couple weeks ago with Jackson Hole, right? At the start of the week, it was like cautious mode ahead of Fed Chair Powell, and then when he dropped dropped the bomb, I wouldn't say dropped the bomb, bad analogy, but when he was able to dispel some concerns that he might be turning hawkish or keep the hawkish tone, set the markets on fire. And now again on Friday, it's going to be all about Fed Chair Powell kind of set the stage because the reason to cut the rates was a weakening job market. So I don't even know what's going to happen if the jobs report comes in negative 200,000 jobs and the unemployment rate upticks to 4.4%. I mean, it's almost like right in the what Powell was describing, that there's concern around the economy weakening in regards to the jobs, right? So it's almost like a bad print would be a good one. But then if you're on the flip side, say, well, if they cut rates, that's going to stoke more inflation. So it's a whole balance. To me, I still remain in cautious mode for the next couple sessions. Tomorrow we have the JOLTS report at 10 o'clock. Nobody really looks at that, but that could certainly rattle markets. Then on Thursday, we have weekly jobless claims, ADP reports. So those are other little snapshots into Jarvis. So it's all going to be about the jobs starting tomorrow. Today, ISM PMI today, nothing much. And it's yields are rising, the dollar's stronger. Take a look at what happened with the euro markets overnight. Well, this morning, DAX off over 2%, yields hitting multi-decade highs. The 30-year UK gilts, whatever you want to call that, so 5.3%. And then you got to worry about the U.S. in regards to its yields, right? I mean, the thing with Fed Chair Powell a couple weeks ago at Jackson Hole was that he was starting to talk rates down. But if he's not able to talk rates down, and then they go and cut rates in September in two weeks, and the rates keep going up, then it's like that snowball that's just going downhill. And then it becomes about the U.S.'s fiscal situation, right? The runaway debt, financing the debt, and then the government shutdown at the end of the month. So all things considered, I don't say I don't have my bear suit on, right? I say that so many times. Sorry if you get if I say too much, but there's a lot of charts too hanging right at the moving averages. I'm all about, especially short term, 50-day moving average, certainly important. So I want to see some of those names. If a lot of these charts that I pull up, it's like these stocks, and they were, the thing is, because we had the anomaly with the Liberation Day and all those lows in April, the anomaly of all these names just getting destroyed so quickly that their moving averages kind of got out of whack. So you go back and it's like, oh, Plantier hasn't been under its 50-day moving average since April. And then you go down the list of all the names, and all of them were under, I think only at the April peak when all the names were getting destroyed, at the April lows when the SPY was at 480 and change, it was like 8% of the stocks trading on the S&P were over their 50-day moving average. So, I mean, pretty much 92% of the names that you look at are going to have traded under the 50-day moving average from April. So, I mean, I'm big about averages, but that kind of skews it just a little bit, but just want to see some of these names hold, especially the overall index. So for now, I had ranges the last couple of weeks. I just want to see how tomorrow plays out, because tomorrow's a big day. Are we going to get, it's going to be a follow through day on the downside, right? I mean, we've had Friday, then we have today, and today we found a bounce, 634.92, right at the noon hour, chopped around, and then we had a nice bounce. If we get a follow through to the downside tomorrow, then I think we're under the 50-day moving average, and we got to start talking about 618. The thing is, I finally put a support resistance trend line on the S&P. I haven't done that in a couple months. 633. That's kind of my line in the sand now. You start looking. Came back to those lows at the end of. Let's see. Whoops, sorry. Just posting here. In the middle of August, hit it again. Back again at the end of July. Some of that was right. The jobs report, that big swing, and then we recovered that. So big spot. And then on the flip side, in July, we hit up against that level a couple times, especially when we had that very tight trading range for like 5 days. So if that breaks, I'll be open to get more hedges. And I still think long term things are. So you take a look today, biotech names are running. I don't know if some of that's the United Therapeutics news around their lung drug, a positive study. I'm not familiar with the lung issue that their solution they're solving, but I mean, stock is up like $8 billion in market cap. So obviously there's some meat to it. But you take a look at the IBB, it's almost like trading on a different market. Some of these biotech names going. I don't know if it's some of the news over the weekend with HHS. So anyway, so in regards to market, that's a big spot for me tomorrow. You know, I probably so I'll talk about the put hedges in a second, but I was looking at SQQ before. Um, to me, I'm just trying to wrap my head around. Okay, what's the rationale behind the market rallying into Friday? Right. To me, the only thing that would really get us back to well, I wouldn't say all time highs, but I mean, unless we have a rally, tomorrow and Thursday, is if the jobs report is like 100,000 jobs created, right? Because then it leaves uh, it just I think that would be the ideal scenario, right? Complete destruction of jobs report. I don't. So I don't. I'm trying to think of scenarios that the SPY would trade back over 647 and above, and I just can't. I just can't wrap my. We don't have earnings catalyst. You have Broadcom. Uh, you still have some overhang with some of this stuff. So that's kind of just where am right now. I'm in cautious mode. So today's one of those days. Maybe I should have sat on my hands, but all right, so that's kind of the overall market. So just individual names. So I went and got those. Hood's not a name. I remember looking in the 30s, in the 20s. Gosh, I remember back in the day when it was a garbage stock because Ved, whoever his name is, banned sell it buying trading GameStop during the peak of the COVID craze. I mean, you would thought that company would never recover, and here it is. I mean, they've been one of the early adopters in all these different uh, things that are disrupting trading. Right, the fact that commissions. I mean, gosh, who remembers if you've been around long enough back in the day, you traded options. It was $9.99 for a trade and 99 cents a contract, right? So you do the math. If you want to trade 100 contracts on the open and the sell, right? If you flip them on an intraday basis, I mean, you do the math, right? I mean, that's a decent amount of commission just get the trade right off the bat. You're losing $220 just on taking a trade, and then you got to hope the trade goes in your direction, things like that. So they revolutionize that and become the trendsetter. Then in regards to crypto and crowdsourcing, all the different things they've done on their platform. So creating tiers and monetizing their data, just a lot of good things. I mean, but the stock has been on an epic tear. I mean, a lot of names have, right? I mean, not just Hood. And they look, it's right at the 50-day moving average, tight trading ranges on Thursday and Friday. I wouldn't call it a cult stock, but it kind of has that cult stage because not only the people who trade it, love the sector, love crypto, love all that fun stuff, but they usually have a Robinhood account, right? So they have pretty much firsthand experience using the platform and being excited about things. So a lot of the moves sometimes becomes this like a cult status. But anyway, when the market does pull, those are names that you typically have they'll be down 6-7% one day for no other reason, just because the market's selling off and it becomes one of those snowball effects. So got those inexpensive puts. I'll continue to hold those as a hedge. I was looking great right at the open when I got them. Spiked all the way up to 102. Looked decent again back in the afternoon. They were still in the red, and now we have the bounce here in the afternoon. You know what? If I didn't think that we had the possibility of testing 633 on a SPY, I would salvage them, but I'm just going to hold them. Uh, and you have to think now. We had the situation with Japan, right? Everybody talked about the yen carry trade back last year. This time, actually, it was like a couple of weeks before that. Then again, at the start of this year, and now it's like, okay, the yield's going nuts in the EU. What is that going to be the next shoe to drop, right? Or just be a catalyst for people to fear monger and for the market to pull. So that's kind of that. So that's Hood. And then V, V, my old favorite here. That's another name, right? It's 50-day moving average, 50-day moving average 347.70. It broke under that after I got my spec puts. I was looking for closer strikes. I'm like, if it pulls 3%, my out of the money strikes can be up a couple 100%. So that's the rationale. I mean, on the flip side, it rallies 3%. Those are bidless. But if it rallies 3% and I get closer money strikes, those are going to get destroyed too. So I'd rather do small risk, high reward, right? The lower the risk, in a situation where it's not being priced, the move's not being priced in, obviously the reward. So not only that, be able to sleep tonight if there's some crazy shenanigans. So that's V and Hood. And I was intraday when we're getting close to that 633 handle, I was looking at SQQQ calls. Again, another inexpensive hedge trade. If the poop does hit the proverbial fan and we do break 633 on the SPY, that's probably the next hedge that I'll look to get. Again, I'm not putting my bear boots on, my bear suit. I'm not taking off bull horns. I'm not doing any of that. I'm just as a market. I'm trying to find opportunities where I think the best case, where the best probability is for some things to happen. I just similar times we've had this over the last couple of months where it's like, okay, we're gonna have a pull at some point, and the puts are gonna pay. Similar to Friday, similar to the previous Friday, similar to the other situation. That's kind of where I think the highest probability. So that's why I'm not being. Today was not a day where I'm going to try to buy the dip on some of these names that got destroyed. So that's that. Well, speaking of Detroit, CGC down 15% here. I mean, all things considered, the candle doesn't look too bad. It's just the issue is because the thing has moved so much. I mean, it was a what, 6, 7 session rally heading into Friday. Then we had it almost closed green on Friday, and then you had the news after hours. Still like this one. I'd already locked most of the Octobers in. Still hold January's. I'm going to look for other strikes too, but I'm certainly not going to wait. I'm not going to be rushed to get another position. So maybe tomorrow, maybe possibly Thursday. So just a name that at some point too the news is going to hit and these names will take off. But unfortunately today it's one of those days where some of these smaller cap names or names that have been on tears are getting beat up, right? Some of the other names in the space, ACB, Tilray, all getting hit up today. And IIPR, which was actually hanging up in the 56s mid-morning, and then it's a slow melt, slow painful melt. Still sitting here 54, 57. Its 50-day moving average 53.81. So don't want to see that get hit, but I'm still holding those Octobers. Already locked a lot of profits now. I'll just continue to hold those. And Serve, disappointing, right? Giving back all the gains from the gap now. And, the big spot for me was 975. It came down to 991. I'd already locked some of the Octobers in for some nice profits, so I'll just continue to hold those. Unfortunately, the September strikes, which were coming back to life, going to need some kind of catalyst. Hey, maybe there's another upgrade or some to that effect. So continue to hold those. Another name, at some point, if we do find some footing, I'll look to get some more strikes. And then I was mentioning, take a look at IBB, and it looks like almost, I wouldn't even call it a solid uptrend, but just waiting for this to finally go. And unfortunately, some of the names that I've been trying to trade for upside, especially in the small cap side, I mean, Edit, I wish was rallying much more today, but Corbis, that's back almost near $10. You have Turn Pharmaceuticals. And the thing with Turn, people ask me on FinTwit around VKTX, oh, you're going to get back in, or what's your thoughts on, and to me it's like the risk on that one. I mean, there's definitely reward, but it's like the market kind of has spoken, and I don't know if they're going to get bought out. So to me, it's almost like some of these outlier plays that are smaller in size that I think there could be some kind of pocket acquisition for some of these mega cap bios that don't have any play in the GLP-1 space. You got the Turns, the Corbis, and you also have a GPCR, which is obviously, I mean, things down like 75% from its highs. Not saying I'm going to get any calls just yet. This thing, I mean, take a look, it was $2.50 back in April. So it's getting close, right? So I don't know, just frustrating on one hand. The other hand is like, I could see this going. It's got a high short interest. It trades a little more than cash. So anyway, just those smaller names definitely back on radar. I'm trying to think. Zscaler, right? I got asked, Seb asked me this morning. Yeah, it MDB was a little different, right? MDB, I was playing up in hype into earnings. I traded for a couple weeks. I thought its previous earnings were monster ones. It should have been much higher than where it was. Did I think it was going to rally over $100 in the span of 2 days? I mean, it's had some big moves before, but the premium has kind of made me say, okay, this is not the best risk reward for that kind of scenario to play out. Because I mean, the premiums, the implied move for MDB into earnings was 15%. So here's Zscaler. You take a look at Zscaler, its implied move is like 10%, but it's had one move over 10% over the last 8 quarters. So, I mean, does that mean, is it, are you betting that this is the big move? But if to me, if the implied move was 6%, then I would say, okay, maybe there's a decent play out there. But you start looking at the premiums. I was mentioning in the chat, maybe the 40s, the 340s. I mean, those are 62 by 69. But they're down 33% today, only on a 1% move on the stock. So I mean that could be something. It's funny, and then you look on the call side, all those, I mean, those calls, yeah, the calls are, and then you look on the put side, the puts are green. I mean, it's only down 1%. So I don't know if that's saying anything. Nothing crazy in regards to volume. I mean, there's a lot of volume on the put side. It looks like, I don't know if those are spreads. 1,700 calls, 1,700 puts on 250s, 1,600 on 240s. That might be spreads. 230s has 1,100, and then you go on the call side on the weeklies, not much. So I don't know. Not betting with that one. Anyway, let's have a great day. I'll be back on audio later. Rock and roll.